Okay, just having a quick look around. Those of you who come regularly will know Euro Aussie is one of my, it's just a pair that I've got some very long-term positions in at the moment. So I'm always keen to keep an eye on it. But this month I've been really looking at the pound and looking at the just the pound pairs. In fact, I've been writing about the pound pairs on my Forex trading page over at I said Amazon, Facebook. It's called Learn Forex Trading, and you can catch up with a little bit of analysis that I do on the markets. And as I said, it's particularly on the pound, simply because the pound's been delivering some really nice moves. I opted for the pound at the beginning of the month, which you can do because currencies do have a sort of seasonality to them. That's if you're not wedded to maybe a handful of pairs that you like to trade, consistently. There is seasonality in the market. There's also, currencies are going to be affected by political events. And I think yesterday, as I said, it was Brexit and it was the EU summit. There was very little fundamental news, and the pound's been on huge, looping trades to the upside and to the downside. It's it's just one of those times of Brexit being the reason for that, right? But as I said, I'm just on the Euro Aussie because it's a really interesting, both from lots of perspectives. First of all, we have the London Open. As we've said before, the crossover sessions are times when you have an influx of new traders coming in, and with London you have a huge participation. Suddenly, you have this inrush of activity and volume, if you like. Volume is participation, it is activity. We've had the European Open. Sometimes you have a bit of volatility at the European Open, as we can see here, certainly on the 10-minute chart of the Euro Aussie at 7 o'clock this morning. We had this dramatic fall lower. This is really a continuation on the 10-minute chart. There's a breakaway. David very much looks at reversal trading opportunities. That's his, that's his favorite, isn't it, David? Would you say that was your favorite? That is pretty much his favorite approach on to any chart. Actually, he just looks at reversal opportunities. It has advantages, it has disadvantages in the sense of only from the sense of preference. I like looking at congestion phases. I like breakaway trading. There are different have different characteristics for breakaway as from reversals. In breakaway, you have to be a lot more patient, and you do get the argument against breakaway, as you will have read and have heard from other traders, where you get an awful lot of fake outs. Well, you would, first of all, if you don't use a methodology such as volume price analysis, and hopefully our indicators as well, because once you have an indicator such as we have here, which is the volume point of control, and this is the area of this chart where there has been what we call the most transacted volume. And it's, if you want another description of this area of the chart, it's where the market is in fair value. There is no, traders are happy to transact in around this this point here, around this region. And you've got some, but what also happens is with an indicator such as the accumulation and distribution, you then, each time you have an attempt to break away and it fails, you have these areas of resistance to the top. And pardon? I've crashed as well. What? I think everything's gone. Oh, Lord. Okay. Hi, everyone. Sorry, talking away. David's machine's decided to crash, but can you actually hear me? Hopefully you can. Or probably not. Oh, fantastic. Thank you, Izzy. Thank you so much. Right, I've completely thrown for a minute because David said I've crashed, and my machine temporarily stopped for a nanosecond. Fantastic, thank you, Ashley. Okay, what was I saying? Right, congestion areas around the volume point, what we've developed this indicator called the volume point of control. It's where the market is what's in fair value. There is no firm direction, either one way or another. And as it moves further up, you can see here the areas of resistance are built, and with the accumulation and distribution indicator that we've developed for NinjaTrader, this line actually gets thicker. Now on MT4 and 5, what the difference there, if I just bring up the Euro Aussie at this, let's be consistent, what happens is the line doesn't get thicker, you just get a thick line, so you know it's a strong region. It's just that we haven't been able to program it to make that to increase the thickness of the line that you can see on NinjaTrader. So we know that's a very strong region of resistance. Then we have the volume point of control as well, but actually this happened overnight because it's got the Aussie in the pair. Aussie's always going to be moving. It's a local currency, obviously, to the Asia session. So we've had a really nice break lower. Then we've had the European Open, and we had a great big thump down with this candle here. Not a lot of volume underneath it at 7 o'clock, but it triggered the volatility trigger indicator, which is these little purple arrows that we have here on the indicator. Sometimes they come up as little circles. So we know that piece of price action on this chart is outside the average true range for this particular instrument. Now, what tends to happen practically 9 times out of 10 is the price will then retrace to within the spread of the candle, and this is exactly what we had. And we've had a sideways price action. We've had then we've had London come in, attempt to rise again, more weakness, and then it looks like this is going to be going lower. The trend monitor is still red. All the trend dots are still red. Now you look at that piece of price action, you have to be aware of the session crossovers. I also have a Renko chart up here, and I also have the version of the chart with the camarilla indicators. But I just want to show you what also happens using, we have another indicator here, what we call the tick speed, because there's no central exchange with Forex. What we look at and the way we analyze the volume in this market is through tick activity, and tick activity is exactly that. It's changes of price, and the faster and the more changes of price you have, then that builds up the volume, if you like. It gives us a volume readout. It's because there's no central exchange. No, you don't have 100% of the information that you would have, say, on the futures market, but it is good enough. And to be honest, algos use tick volume as well. So tick volume is a well-respected way of being able to analyze what is actually going on in the market. What VPA does, it takes that information that you have that the tick is delivering, looking at the candles and candle patterns and the spread of the candle in between, particularly, and the wicks also, and judging whether that information that is being displayed on your chart is genuine or not. That is what VPA will do for you. It confirms, it validates what is actually happening on the chart. So at 8 o'clock, you always have this massive inrush of volume, activity, participation at London. It's just what happens in the London session. So you have to read it in the context of the London session. And it's a great time when a lot of traders are actually trapped in bad positions because maybe they're not aware of a crossover session. And what we have here at 8 o'clock, we have a rush up. This is what I'm saying about traders not liking breakaway trading because of fake outs, as it were. But you have here, an inrush of volume. You have the volatility triggered as well. You have an immediate retrace to within the spread of the candle. Then you have this candle here, which is really interesting. This candle here has more volume under than that one, but what happens is it's not as wide a spread. It's actually narrower, and it also has a wick to the bottom to the top of the candle, which tells you there is weakness. Then you have this candle here, which is the down candle. Yes, you have a lot of volume under that candle. You also have a lot of green under here. The tick speed indicator tells us, if you like, it picks up the momentum and the raw activity that you see. So when you have green, you know there's a lot of participation, and we know there's a lot of participation because it's London anyway. But that makes a 2-bar reversal. It goes down, it goes back to the volume point of control. It's still not ready to, in any firm direction one way or another. And in fact, it's been moving sideways. A lot of volume going in there. Effort to rise, very narrow spread candles, stuck at the volume point of control. There's no decision one way or another whether it's going to carry on low. We've had more congestion, again, volume going in all the time, and then we've now had a sort of break, a further break from the VPOC here. But what's happened is it's on a volatility candle with not a lot of volume underneath it. It's a big price move, but not a lot of not huge amount of volume, and we've gone into the spread of this candle. Now, how we look at that in terms of what is happening on the Renko. Now, what the Renko does, it smooths all that out away. It takes away all the noisiness that you have with the candles, and it tells us. So we have this is picking up the initial break. Here we have the pullbacks and the minor corrections that we can see here, but the trend monitor is still red. The trend dots are still red. We only have one little blue one here. We had a couple of green candles as we see here, but the trend monitor tells us this is still in a downtrend. This is the move sideways that we saw at just between 7 and the London Open, and now it looks like the momentum is carrying on low. But why did we have that pause at that particular point on the charts? And this is where we come to our other indicator that we've developed, because when you have support and resistance levels, these key levels on the chart, you have to find a way of giving them some kind of importance, some kind of hierarchy. Now, you can use, a lot of traders use Fibonacci. Fibonacci does a lot of stuff, but one of the ones it does, it gives a kind of hierarchy. So when a price is coming, say, to the I don't know, the 50%, although 50% is not a Fibonacci level, it's a CAN level. It comes to, I don't know, 61.8, or traders know that as an important level, and you look at the price action. Could it reverse, or could it go, could it carry on lower? But with the camarilla level that levels that we have developed on this indicator, the fourth level, either from resistance or support, are very, very important. And now this is on the 60-minute chart for the Euro Aussie, and the way the levels are calculated is up to, but not including, the 60-minute. They're recalculated every 24 hours. So that move lower, that sort of attempt to break, has actually hit the S4 on the hourly chart. If we look at the 10-minute chart, we can see here it's actually attempted to break from the S4. Now, what tends to happen at the fourth level is you do get a break, and you almost get a retrace back to the level, a constant retest. In fact, you get them along most of the levels, but particularly so on the S4. So you have to be aware, if you've got the indicator and you see the break and you think, oh great, it's gone through, more often than not, it will go back and retest it. And of course, if you have with the CSIs, let's have a quick look here. Let's have a look what's happening here. And I've got them here on, this is on the 10-minute, and I've taken the lines out and put them, paired them up on different panes here. Here we have here what's happening on the 5 minutes. Well, this is the move that we've seen develop on the charts that is ongoing at the moment. The euro has taken a turn down. It's been driven very much by the euro. The Aussie is still drifting higher. Let's have a look on the 10-minute. Here we are. That's turning higher, turning lower as well. This is due possibly to have a turn, the Aussie, because it is very overextended, but I don't want to say, well, it's got to turn. It will, but it could just turn and carry back up, as as it can, you know, it can do, but it's just something to be aware of. But clearly the move that we're seeing, not so much driven by Aussie, much more driven by the the selling that's coming in to the euro. When you the ideal pair, if you like, is you want to see an equal, the currency being driven equally, if you like. There's equal, there's a balance between buying and selling. So you want to see strong buying and strong selling. And in fact, over on my Forex page at Facebook, the one that came to mind yesterday was the pound Swiss, where you had this equal drive. So one was going high and one was going low very strongly. That is a really nice move to pick up. It doesn't mean you can't have a move where you have more asymmetry, where market is maybe perhaps, you know, as we see here, buying Aussie very strongly, and you know, there doesn't appear to be an equally strong sell on the pound, on the euro, as we see here. Or maybe you're coming to a point, you know, that could possibly turn and that will keep going lower. Now that may carry on lower. That's when you look at your levels, that's when you look at the volume as well, and you may say, do you know what, I can see there's a strong sell coming into the euro. Possibly that strong selling is reflected in another euro pair. So this is how you look at these indicators, and how you look at the charts in terms of the candle patterns, the volume. You kind of put it all together to give you this very detailed three-dimensional picture of what is going on with the price action. And of course you have to be aware of what the fundamental news is. I don't think there's any fundamental news today. And with the euro, be very conscious of what is happening on the political scene, always, because as I've said before, the euro is a deeply political currency. It is driven primarily by politics and the bond market. And the bond market will ultimately reflect whether the currency will succeed or not. Because if the spreads, the bond market is about borrowing, and the bond market can destroy a country, in the sense that if your borrowing costs go completely out of control, how is it going to, you know, you're not going to survive. That's a fact of life. So as I said, the Italian spread, the Italian yield on their bond, you know, how much can they, you know, how much is it going to cost them to borrow in the open market? And then the difference, the spread between what is happening on the German Bund, which is like a safe haven, it's as good as a treasury, if you like, US Treasury, and what the, you know, that's what the market is, that's what the Germans have to pay, because they're considered to be, you know, prudent. They have a vibrant economy. They're very careful. They're cautious. You know, so the market's willing to, you know, they don't. Borrowing doesn't cost them very much. Then you come down to us feckless Italians down in the south. You know, how much is it going to cost you to cost them to borrow? But the market, if the Italians are being backstopped, and all of a sudden are being backstopped by the ECB, backstopped by the, you know, the countries, the frugal countries, then the markets will reward you know, the countries accordingly. Right, what the camarilla tells us is where this price is heading next. So we've had a break from the S4 here. In fact, we're very close to the S4 on both the 10 and the 60 minute. We can see here these values are recalculated every day. If we have, looks like we've had a nice break, a little bit of buying, not a huge amount of volume under that candle there. And the next logical target is the S5. Sometimes it gets there, sometimes it doesn't. You have to also use your support and resistance levels, either if you've got MT45, or here we have the accumulation and distribution on Ninja Trader. And let's have a look. Oh, I've lost my chart. What have I done with it? Hold on a second.
I do it all the time.
You do all the time. I've lost my charts. Has your thing come back? You're back. Okay, listen. Right, I'm just keep an eye on the Euro Aussie. I'm really pleased that it's going down nicely for me. I've got some very long short-term positions on this particular pair. So it's good to see because it had turned against me slightly, but you know, I was happy to hold on to them. So let's see what happens with the Euro Aussie today.